Alright, my bad. These fucking dogs are grabbing random shit. The other day they got my fucking
Hey, we live, bro. Hey, so what I'm gonna do is,
my bad. I need
no, nah, we good. So what we're gonna do is, can you log in real quick? Just make sure if you can hear the music. I don't want the music to be. I'll take a look right now. I'm
my music edit.
gonna mute my mic. I don't want the music, the background music, to be too loud.
Okay.
Hey, bear with me, chat. I'm trying to adjust the music volume in the background. Apparently, it's too loud. I'm trying to bring it down. Yo, can you hear me? Kush, can you hear me?
A little bit.
All right, so I'm trying to bring it down. Just let me know when it's like the volume is like acceptable for hearing.
Nah, you're louder. You're louder than the music.
Oh, I'm louder than the music.
Yeah.
So did I turn it down too low? 33.
Yep.
All right, so right now what we want to take a look at, can you see my screen? Let me go ahead and change my screen view real quick. Because what we need to take a look at is we need to take a look at my screen. I'm gonna give you the opportunity to share as well, but we gotta take a look at my screen and then identify where we are. So, all right. So this is JP or Japan 225. So we're gonna start everything naked. I'm gonna do everything. Pause. I'm gonna do everything from scratch because I want everybody to see how we do this thing, man. Hey, let me know too, Kush, if my mouse is too loud. Because if my mouse is too loud, I need to know. But what we want to do is we're gonna start everything from.
Can't even hear your mouth.
All right. So that's cool. Because what I want to do is I want to basically just show you how we look at these charts every time we come to these charts. All right. So for anybody who's new to this space, anybody who's new to day trading, all right, the very first thing you want to do, obviously, after you go to Trading View, you want to open up a new account. You can open up an account real simple, real easy. It's not that difficult to open up an account. There's so many different levels of accounts. Um, I started with the basic account, so it's not a big deal. You can literally just get any. I think you can get any level of account, and for the most part, you'll still have access to the back testing feature. I think the free subscription, does the free subscription have a back testing feature there, Kush? Okay, so the free version does not have the back testing feature, but all the other paid versions, if I'm not mistaken, should have the or should include the back testing feature. And the back testing feature is something that you very very will need as you're doing this, simply because as you're doing this, you're going to want to back test the strategy in order to see that it actually works, right? So that you can actually have an edge over the market. All right, so what we're doing right now, this is Bitcoin, and I'm literally going to walk you through the process and how we set this thing up. So in the market, you're always going to have what they call ebbs and flows. you're always going to have those peaks and valleys. And the reason why this is big is because it's those peaks and valleys that you can actually look to get in at and potentially make money. So for instance, if we're just looking at this, I don't even have anything on this chart. If we're looking at this from scratch, this is a valley right here, right? Here's a low. Here's where we broke down below it. And then right here, we came up and we broke back down below it. So right here, this price value right here at 28,422.98. That's a price value where, price is being supported. So typically whenever price comes back down here, and that's without any indicators, that's just looking at a naked chart, y'all. You can see just looking at this chart, this price area, this price range right in here is where we tend to get a lot of price direction or movement. All right, so whenever price gets into this level, we can either use this level for what we call support, or we could either look at this level as resistance, depending on what type of price action is occurring at this level. So when we start to see price break above this price level, right, that's called, when it comes break above and then it comes back, that's called a break and retest. All right, that right there is how the market typically moves. It moves in waves, it moves in patterns. So right here you had this push up, that was our breakout past this price level. And so any trader that was looking to get in here and go long, you wouldn't get in up here at the top. You would simply wait till price come back down here, and you would try to get in down here where this support level was formed. All right, so that right there was what we typically call a break and retest. As you can see right here, this is where price came back, and this is where price retested its price valuation right here. And then it got more buyers entered the market. More people were interested in buying it at this level. And the way we really know that by looking at the price action is we start looking at price action candles. This price action candle right here, this is a price action candle that's actually a hammer. All right, when we see something like this, a candle that basically the body forms 2 times or 3 times the length of the tail forms 2 times to 3 times the length of the body, right? Especially of the opposite color. Not that we really care much about the color, but when we start seeing things like this happen, that's telling us that there's a huge degree of rejection going on down here. All right, so it's already, that's our very first indication before anything. This was one of our very first indications that price now has buying momentum. Buyers are starting to step in the market and push the valuation of Bitcoin up. And so that's exactly what happened right there. We started to push the valuation of Bitcoin up. It came back down to this price level. And then when it came back down to this price level, we started to see it again right here, where we started to see more rejection, because this right here, this candle right here, this is a A1 rejection candle. You see, again, the body or the tail is 2 times the length of the body. That's another indication. That's a hammer, right? These are the price action patterns that I look for in the market when I'm looking for certain areas and certain zones to get hit. And when we start getting things like this right here automatically becomes our very first footprint in the market, letting us know that we can anticipate, possibly, we can anticipate a reversal in price. And so as you can see, once we start to get these 2 candles to form, we got this candle right here, and then we got this candle right here that started to form. Once we got those 2 candles to form, that's exactly what we started to actually get in the follow-on price action. So after that, you feel me? Right after that, price came back down to this level, and then we just started to kind of get more and more buying interest. We started to get more and more buyers to enter the market and push price up. And so right out of this level, right from this level, before we even can get comfortable, before we can really get below this level, price does what it does. It reverses and it makes this strong push to the upside. Now I can tell you that is a wonderful move. That is look at, that's literally 20. Oh my God, that's $27,000 in price movement. All right, so I need you to let that sit in. That's $27,000 in price movement that we went from right here at the top of this price level, which is 30,920, all the way up to right here where we started to pull back at 57,674.35. When we got to that level, at that level is where we started to see the price come back, pull back, do its little drawdown, right? But what I'm saying is, look at the movement, right? That's a wonderful. Now again, this is looking at it on a daily chart, so you can see this didn't just transpire like in a matter of minutes. This transpired over a course of like weeks or so. But what I'm trying to share with you looking at this, right? So if you look right here from the time that we entered into the zone, you get what I'm saying? You go all the way back down to January. We were in this price zone for some time, all the way from January, say maybe January. Oh, actually from December, we were in this zone. We came into this price level around December, and then it accumulated buying interest all the way up until say January 28th of 2021. And then from there, what I'm saying is we took off. It accumulated all this buying interest at this level, and from there, price just pushed up. Now, the point I'm making is, as a day trader, you stand a chance to make a very, 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 very lucrative, I'm saying very, very, very handsome salary, if you will. I can't really even call it a salary because, yeah, it's really not a salary. But you stand to make a tremendous amount of money. If you see something like this, you recognize this happening in the market, and then you're in a position to take advantage of it. Because then what we would do is we would set that up as a trade looking like this. We would literally put our entry right here. We would put our yellow box up top. We always measure 3 to 1. And then we would put our stop loss probably at the very first low, something like that right there. And then we would take this up about 3. And that right there was a beautiful trade. I mean, that's a beautiful trade. And so you capture all that swing motion. You capture all that swing momentum off that one push. And so that's what we teach here. That's what I try to actually, teach in my Patreon. That's what I try to teach in my book. All right. Anyone interested, I definitely have a website. You can go follow me and get that type of information. But again, what I'm sharing with you is once you get this kind of understanding of the market, and once you understand price action. So let me go back and show you what I mean by price action, because I kind of alluded to it earlier when I said that this candlestick patterns. All right, candlestick patterns is a style of price action. It's a dynamic, or it's an example of price action. But another example of price action is market structure. It's the way formation, it's the way that the candles form and the way that they move within the market. If you could start to recognize price action through market structure. So for instance, this right here happened as well. We had a break in structure right here, and we had this bullish engulfing break right here. We had this bullish engulfing break. Once we saw this bullish engulfing break, that was another opportunity to scale in and get in another position. What you would do is you would wait for this candle, this bullish engulfing candle, to stop and form, wait till it closes, and then you would set your actual, you would set your long and short tool off that candle like this. You would set that off that candle like this, and then you would just set it up for another position in the market. And then what I like to do is I use what's called fair value gaps. So I like to cover at least 1 or 2 fair value gaps. And so how I do it, I use fair value gaps. I don't have them currently on here because I just wanted to show you all a naked chart. But I cover this fair value gap just because I'm expecting price to come back into this fair value gap. But if I see price start closing back below this line, this area where it broke this structure, then I know price is potentially going back down bearish, and it's going back down in valuation. But at this point where we have price at right now, we already know price is moving upward. We already know that it's going bullish. We already know that the trend is going upward. And so simply what we would do is we would measure this covering our very first fair value gap, which is right here in this candle right here. And then we would just mark our take profit out 3 like that. And so what happens is, just because you mark it 3 to 1, now 3 to 1 is what I use. Actually, sometimes I use 5 to 1. So you gotta do it at your discretion. But the thing is you always want to limit your risk to 1%. All right. As long as you can limit your risk to 1%, you're good. Because what happens is, as long as you stand to earn, as long as you stand to gain more in profit than you lose, then you figured out how to day trade, basically, in a nutshell. Because the name of the game is you want to limit your losses, and you want to take from the market more than you give to the market. And so in this instance right here, again, like I said, this price action pattern, or this price action play right here, this right here would have been my number one indication that now price wants to go even higher in valuation. Because as soon as we broke this market structure right here, because we broke this high, as soon as we broke that high, you got to understand it took a large degree of money to break that level. As soon as we broke that level, I knew for a fact price wanted to run off. Now, again, as you can see, this was a loss. But you got to remember, as long as you're limiting your loss to 1%, you're cool. But what I'm sharing with you is look at all this time that it was in profit. Now, you don't have to do exactly what I do, right? I'm going to hold it because my discipline teaches me to hold it. More often than not, as long as I'm holding the trade, I'm going to always walk away from the market with money. But what I'm saying is, so you were in profit all this gold area, but then it came back, and then like I said earlier, once it broke this line right here, it indicated that price wants to go back down in value. And so what happens is it went down, but look, we still have this area right here where price is being supported at. And just like that, it came back down to this price level, which is 38,833.65. It came back down. So between 38,000 or 30,833.65 and 28,422.98, between that price level, between that price range, that's where we see price start to get supported. We see buyers come back in the market and then push the valuation of Bitcoin back up. And so as you can see right here, again, these are price action plays. These are plays that I play. These are plays that I trade. As soon as we saw this happening right here, this right here was another example of one of those hammer patterns that I love to trade. It came back down to this price level and it pushed right back up. That right there is your very first indication, or your very first fingerprint or footprint, if you will, that price wants to push back up and that buyers are still pushing with momentum in the market. And so price starts to dwindle. It starts to slowly diminish in value, and then it comes right back down to this price level. And then we get another one of those price action plays right here where we see this doji. This right here is more or less a doji. It could be more of a pin bar, because right, you got to remember, I'm looking at these with the bar type candles. All right, so let's take a look at that real quick. So we have different styles of candles. All right, each style of candle is just giving you a different degree of information, if you will. Some people read the candles different than I, but the way I read the candles and the way I read the bars are one and the same. All right, I take the same data, I take the same information from both the candles and the bars, but these are called your traditional Japanese candlesticks. And so this is what you would typically see. All right, so what I'm sharing with you is each one of these white tails is an indication of rejection. All right, each one of these white tails is an indication of price coming all the way back down here, and then each one of these bodies are closing above this price level. And so once we got this price action play right here, this price action play right here is another one of those plays that I love to trade. And this price action play right here is our engulfing pattern. Once we saw price basically engulf all of this price action, this red price action right here, and we saw it break and close above this candle, once we saw that, that's when we also had another entry to get back in the market. And so you can literally set that up like this, right? Now, I traded all these, by the way. I traded all these because I saw these during the competition, the TradingView competition, and I was able to take advantage of each one of these. But you would set this trade up to look exactly like this, right? 3-to-1. This one actually went on to I think 10 or something. Like this one ran on forever, because when it came back down, you got to remember, it had already been at this price level before. And so it had accumulated all these buying orders over here. It ran up. Our first trade was a dub, but then our second trade would have been an L. And then when it came back down though, our third trade was a major dub, like a major dub. Like that's an 8-to-1 profit split, right? That's an 8-to-1 ratio, right? A 5-to-1 ratio right there, depending on how far. So how I traded, I would basically cover this area right here of support, and I would cover the very first low that I can find. So the very first low would be over here. These are the very first lows, and I would cover that just because if price comes back down that low and it starts to close below that level, then I know my analysis is completely off, and I know for a fact that the market is now switched and went bearish. But in this instance, price basically just came back down to this level, and when it came back down to this level, it just thrust it back up. And so this was a huge dub. Like this was a major dub. I don't know if you understand how much money that is, but when you put leverage and a lot size behind this position, like this right here was a major dub. So literally that's 68,711. So it went from all the way from down here. So it went all the way from down here from 32,135.18, and it went from 130. It went from that level, that price valuation, all the way up to this price valuation. That was a lot of price action. That when you put leverage and a lot size behind that, you stand to earn. Basically, you could hold this, and you could literally just be withdrawing like dividends from the market because you were in profit the whole time. Like you can literally just hold this trade, take $50 out, take $100 out, take $20. I mean, you literally could have held this trade. You could have basically sandbagged this trade and just took dividends from the market because it never came back down in drawdown. It was never negative is what I'm getting at. And in other words, you never saw your capital, you never saw your principal in the red. You always saw it in the green. From the moment it jumped off, it stayed in profit. And so that right there is what we would call basically the holy grail. When you see something like that, that's what you want to see. You want to see a trade like that. That's the type of trades you want to take advantage of. But more importantly, these are the type of trades that you're waiting for. Because what I'm getting at is as long as you're limiting your loss over here to 1%, as you did right here, when you get these type of positions, you get these type of trades, they make up 10 times for the loss over here. Like what you get off of here and what you lose over here is nothing. It's nothing in comparison. And so that's the reason why you have to learn how to practice risk management. The key to day trading by far is risk management. You can learn how to manage your losses. You can learn how to really tailor your losses to 1%. Tailor your losses so that you're losing less and earning more. Then you will always walk away from the market as a profitable trader. Like that is literally the name of the game. The name of the game is to walk away from the market with more and not give more back to the market. All right. So in this case, like I was sharing with you as it relates to the candles, these are your traditional candlesticks. These are your traditional style Japanese candlesticks. They read the same way. If you don't know the anatomy of a candle, basically you have an open, which is at the top, and you have a close, which is at the bottom, depending on the direction of the candle. So for instance, this is a red candle. This is a down candle. So basically what happened here was it opened up here at the top, right? It came all the way down right here at some point, right? It went as high up as up here, but it came all the way down here at some point, but it closed right here. Where it opened and where it closed is what's called the body. So this area is called the body, where it opened and closed right here in the middle. Let me go ahead and enlarge that. So this is literally the anatomy of a candle, right? Price action candle. So right here where it opened, because this was a down candle, right here at the top is where it opened. All right. And then right here at the bottom right here is where it closed. But what you have on top, that little white stem, and at the bottom, that little white stem, this is called a shadow or a wick. That's the technical term or technical name for it in the market. So these wicks, these shadows, right, they show us, they indicate to us where price may have gone, but at the same time, the body shows us where it opened and actually closed. All right, so I hope I didn't confuse anybody with that. Hey, you get that, Kush? Yo, Kush. Hey, let me know, man, because right now I feel like I'm rambling right now, bro. Like, you got any questions, let me know, because, you know, I can go on forever about this thing. Hey, I can go on forever, but at the end of the day, like, what you want to take from today is kind of like, and by the way, man, I apologize, but my lives just don't do the same as my recorded videos. And so I do want to get back in the habit of going live. But the thing is it seems that my recorded videos seem to be gaining the much more attention or attraction. And so, but I do want to start going live more, simply because, yeah, I'm not really kind of recording the videos much like that anymore. I mean, eventually I will go back to recording the videos, but I want to get in the habit of going live simply because it's just something that I haven't ventured into, and I would love to get into and kind of explore that more and more. But basically, this is how we trade it. And again, I haven't even put any indicator on it yet. Like, I'm just showing you based off of price action movement. Like, this is just price action movement. I haven't even shown you, like, literally these yellow and purple boxes, right? Those are my risk to reward. As you can see right here, it says risk to reward. This is how I measure my take profit and my stop loss. And I gauge where my entry starts. But again, I haven't even put the indicators on. So when we add the indicators, what they do is they kind of serve more or less as a fine print, if you will. They kind of like, they add like another ingredient to the price action. And let me show you what I'm talking about. So indicators are nothing more than just tools, I guess you can call them, that measure price differently. All right, each one of these tools are designed to, so for instance, let's start with the moving average. All right, this blue one right here is called my zero exponential moving average. It's called my ZEMA. And what it's designed to do is you would take the period, and what you would do is you would put the period to include the amount of candles that you wanted to measure on average. So for instance, I have it listed currently at 317. If you put this on 14, what'll happen is it'll measure the average price, see how tight that is on price, right? I can't see what price is doing because it's hugging price so tight, so closely. So what happens is it measures the average closing cost. I have it set to measure the average closing cost of the last 14 candles. Or you can set it to 200, and what it'll do is it'll measure the last 200 average closing cost. It'll measure the last closing cost of the last 200 candles. And so that's why you see it more kind of like sagging off price when you start to actually increase it in number and time or period. So right now you can kind of see how price is moving as it relates to the 200. We put the 200 in here for the period. So you can see how price is moving in relation to the 200 period moving average. And so simply what the moving average does is anytime price is above the average, it's going to always be on top of it. All right. Anytime price is below the average, so in this case, the 200 moving average, anytime price starts to drop below the 200 average of candles, it's going to be underneath the moving average. And so in this case right here, you can see using the moving average by itself will get you beat up. Because I used to start off doing this, and I'll tell you, you kind of have to use it in conjunction, as they say, confluence with something. So for instance, back in the day when I very first started, I would basically trade the very first break above the average. So if we had a candle that closed above the moving average, now you can see how that still pays you decently well. But I would measure the very first candle. So in this case, let's go ahead and move this out the way. In this case, that would be this candle right here. And so what I would do is I would measure the very first one to break above the average. And then I would get in it for a trade. So if we come over here, we're going to put it on the right candle. It's right here that I would actually first see closing above the 200 moving average. Once that candle breaks and closes above, now there's a buying opportunity there, because the moving average, it measures the average of the last 200 candles. So as you can see, once it does that, you set that puppy up like that, and now you got a solid entry. And so what you would do is you would put your entry line right there. And what I would do, like I would always cover the most recent low. So right here, this is my most recent low, as you can see right here. And then what we would do is we would just measure this out to 3. Now, the problem with this is, like I said, you get a lot of false breakouts, right? You get a lot of this up and over. Now, even though this one turned out to looked like this one turned out to be a very successful move, because measuring it just off of the moving average alone, this one went all the way up to, this one went all the way up to about 3. Exactly. All right. Now, I'm not shocked by that, but what I'm saying is, using this by itself consistently is going to get you killed. So what I'm saying is, this is one way to gauge your entry, but this shouldn't be your only way to trade. Now, when I recognize this and it happens at a key level, like a major level of support or resistance, right? Like that zone that we saw down below. Whenever I see something like this happening, now I know for a fact that price is now going in the direction going up, right? As long as it's at an area of support and this happens, oh yeah, we're going to go ahead and load our clip, and we're looking for an opportunity for price to rise up. And so doing this alone though will get you burnt. So, but what we want to do is we want to take our moving average. I use the 317. And again, I just use the 317 because for me, the way that I use it and the way that I like to trade it it smooths everything out a lot more. Because the truth is you want to see price kind of glide, right? You don't want to see price kind of sag and hang around it. When it breaks, you want it to break clearly, and you want it to break in a way that, you know definitively, like, okay, price wants to go that direction. So I just found that using the 200, the 300, I don't know, the 317, it literally, like right here, when we get a nice break, I mean, we got a nice break, and it literally just stayed away from it. And that's just something that I played around with. I've tried them all. I've tried the 300, I've tried the 200, I've tried them all. The 317 by far has been the best in terms of smoothing out price for me and the way that price seems to respond to it. So at this point right now, we are live in Bitcoin, and currently I'm looking to enter for a trade. And so what I wanted to share on this video, right, is I just wanted to share with you. So I'm going to go back now that I've shown you the candles. I'm going to go back and I'm going to show you what I'm looking for. So let's go ahead and make this back 317. And then I'm going to show you, we want to make the style white because we got a black background. And then I'm going to show you, oh, snaps, that didn't turn out the way I wanted it to. So what happened? I lost my moving average for a second. Okay. So the blue one should be my 317 moving average, and the white one will be my 200 moving average. All right, so that's set up correctly. And so again, as you can see, price tends to kind of play in pockets with it. You see how it plays in these pockets? That's the reason why I started to include the actual 200 with the 317, because what I found was price uses it as support and resistance. It's like dynamic support and resistance. Right here, we got inside this little pocket, we played and we came back down, we used it as resistance. And mind you, when it came at this level, right, we got this one price action play that formed right here. I don't know if you guys can see it, but you gotta really zoom in, right? We had this price action play right here where we had this engulfing pattern occur right here. All right, so again, that was telling me, and we had this right here, this upside down hammer or upside down pin bar. All right, these are price action plays that start to show you basically that price is putting on the brakes. It's basically putting on the brakes. It's losing momentum. It's starting to get exhausted. Once it reaches this level, it gets exhausted. We start to expect it to go in the opposite direction. And so now you can see it plays inside these pockets once we throw the other moving average on with it. And so that's the reason why I say you don't want to trade just one by itself alone, because trading one by itself alone will get you ate up. It'll get you like basically kicked out, stomped out the market. And we're not trying to do that, right? We're trying to stay in profit. So again, right here, we have another attempt, or we have another instance where price came up to this level and it got pushed back. It got thrown back down, right? It got thrown back down. And so when it got thrown back down, again, you're looking at this point, right? Because it's below this, this area of support right here. Because remember, this was support when it was up here. Now it's turned resistance. So once it got thrown back down, it's here where now you start to say to yourself, okay, how low will price go? Well, the way you measure how low will price go is you start to use market structure. And what I mean by that is this is what you do. So now you're looking for price to break this area of structure to confirm that now price wants to go lower. If price doesn't break any lower than this level, now this becomes what's called your new level, your new floor, your new area of support. This becomes your new area of support. So basically between 15,427.94 and 16,012.28, between this level is where you're starting to now anticipate price to reverse. But you won't know that this is your support level until price starts to break above here. All right, because it's not until price breaks here that you form your new high. I need that to kind of like resonate. I hope that sticks in, because you don't know this is your support level until you start seeing new highs form. Because if price continues lower, then this doesn't become your support level. Something lower becomes your support level. Does that make sense? Kush? Yo, Kush.
Yeah, it does.
So now when price reaches this, hey man, you gotta let me know, man. Like if you got any questions, because what I'm saying though is like I don't want to just be talking for the sake of talking. Like if you got any questions, like if you need any like anything like more clarified or anything like broken down, I'm all ears. Let me know. But listen, here's what we're doing. At this price level now, we start to earn support. We start to earn buyers momentum, buyers interest. So now what happens here is you get another price action play. And again, like I said, you don't just use one price action, or you don't just use one indication alone. You use what's called confluence, or you use what's called like more than multiple confirmations. So the confirmation we start to get here is we start to see price break above our 317, and we start to see price break above. This is the same practice that I was showing you with the Fibonacci earlier, Kush. It's the same concept. Once we start to see price break and close above now the 317 and the 200 moving average, now it's here where we can anticipate price starting to go back up. Now, until price starts to close below this level, we are to assume that price wants to continue bullish. All right. And the way you would set that up is like this. You would literally set your stop loss right here. Right. And what I would do is just cover basically this low, looking to the left. So our very first low looking to the left, if you come over here, it's not right here. It's right about, looking at this fair value gap, it's right about, I'll say right about here. Somewhere in here, I would measure it to go right about here. And the reason being is because what you want to do is you want to, like in this instance, right, we don't have anything to gauge our 1% low off of, right? And so in this instance, you have to look left. And so you want to grab your long and short tool, and you want to come scroll all the way over here. And this right here would be where I would cover that one low. All right, so that would be our 1%. And simply what we would do is we would measure this out to be 3, not being greedy, because I know I can see it ran on for days. But this right here is how you would have played that and how you would have traded that. And you would have basically pocketed very, very handsomely. And what I mean is, because it literally jumped from 16,114.33. It jumped from 16,114.33 all the way up to where we would have put our stop loss, our take profit, all the way up to 26,782.17. All right, so that's a lot of price movement. As you can see, that's over 10 grand. That's over 10 grand in just price action, just price valuation. So once you add leverage, you add lot size behind that. Once you add leverage and a lot size behind that, I promise you the numbers are something stupid. The numbers are something stupid crazy. There's something stupid big. But again, that's how you would trade that. That's how you would set that up. It's really, really, I don't want to call it simple, because sometimes I understand that I'd be saying it's really, really simple. And it's not really, really that simple. But it's something that just comes with practice. Again, that's the reason why I made this channel. I made this channel because I really believe in the power of day trading. I understand the freedom that it comes with. I understand that, in the right hands, in the right mind, this is definitely something that you could truly, truly change your life with. And that's the reason why, I learned it, because I believe in its freedom. I believe in its ability to transform generational wealth. All right, so again, if we're just looking at this based off of, based off of price action plays, just price action movement, you don't have to be you don't even have to study the market to be able to look at this, look right, see where the price value is over here to the right, and see how far it ran up. I'll take all this stuff off. I'll black all this out. We'll get rid of all these lines. Again, we'll just look at this on a naked chart, right? Just looking at this on a naked chart, you don't have to be an Einstein, to see, price started here, down here at this low level, and ever since it was at this price level, if you would have basically invested in Bitcoin at 17,292 and just held it, it literally went up from 17,292 all the way up to $72,932. What I'm saying is, I'm laughing because being able to day trade has taught me this. Being able, me learning how to day trade has taught me how to look at just a naked chart. I don't even need indicators no more. Like I can just look at the naked chart and just look for areas in the market where price is broken, areas in the market, and look for areas in the market to try to jump in and just hold it, put a nice little lot size on it, get some profit and get out the market. Again, I trade 3-to-1. That's what I trade on a 3-to-1 ratio. I trade on average. But how we would literally look at this right now, currently where Bitcoin is sitting at right now, I'm looking to get back in. And what I'm looking for is one of two things. It's really this simple. I'm looking for price to either break above here and start closing above here, which will be the breakout, or I'm looking for price to break and start closing below here. Until then, if you get in right now, you're playing suicide. And what I mean is the market is designed to take your profit. It's designed to take your capital. All right. And so what I'm saying is if you get in the market at this price level, at 56,000, basically somewhere around 56,000. All right. If you would have got in right here with no true indication or confirmation that price wants to go up or down, right? You're gambling. You want to wait till price start actually closing. Like you want to see candles close below this line, right? If you start seeing candles close below this line, now what you would do is you start to set that up for a little price action. A trade. You would set it up like this, right? Covering the most recent high. So that would be right here. And then you would just go out to about 3. All right. Now this is Bitcoin. I just thought about it. We got to make sure that we're doing this realistic. And what I mean is in Bitcoin, it moves differently than some other like assets. So we're going to cover this fair value gap, right? These two fair value gaps. And then we're going to, there you go. That looks more realistic. That looks more attainable. All right. That's more realistic. All right. So again, this is all premeditated, if you will. This is all preemptive. I don't know if price is going to go down, but what I'm sharing with you through this example is where, how, and what you need to be thinking when price does come, if it comes back down to this price level. But until it comes back down to this price level, it's literally just playing between this low and this high. And what the market does is as soon as you put your trade on, it's going to take it. It's going to take it. So if you got in right now, it's going to love to take your account. It's going to love to take your money. And what I mean is because right now you're not moving with the herd. You're not moving. If you get in right now, you're moving as an individual. If you get in right now, unless you got enough money to move the market, and that's a different story. In other words, unless you're like a hedge fund, insurance company, or one of the other big banks, right? Unless you got enough money to move the market, which we as retail traders often don't, unless you have enough money to move the market, you getting in the market right here, right now is almost financial suicide. And I simply say that because right now, the market can do all sorts of things in between here. And what I mean is this is a lot of price action movement in between these two arrows. All right, you got from here to here, that price can just play around. It could dance around. It can go up. It can go down. And what I'm saying is people literally get their accounts liquidated. I mean, literally they get their accounts banned, right? Simply because of insufficient funds or margin calls or, inadequate funding, right? What I'm saying is it's here where the market takes full advantage of people who are greedy. Because if you can't wait to get with the flow when it comes either down here or when it comes back up here, where the banks are going to begin to take interest, if you can't wait, you're going to get burned. Because the market will literally, I'm telling you, some buyer, some seller will see retail interest jump in the market and literally try to liquidate your capital. Because your capital, you got to remember, what you lose, someone else earned. It's literally that simple. What you lose, someone else gains. And so some of this is just what I've seen. Some of the manipulation that the market will do is when it sees retail interest, which is retail traders like me, right? When it sees enough of us, because this is retail movement right here, right? You start to see bank movement with these big institutional based candles. These are bank movement, right? This type of candle, these type of candles, this is what banks leave behind. These are the footprints that banks leave behind, right? We see these institutional based candles, right? These are the footprints that banks make, or hedge funds, people with large sums of money, or institutions with large sums of money. But what I'm saying is, this is the reason why you want to wait to enter the market in a safe place at an area of what we call support or resistance or supply or demand. And the best way to do that is understanding price action, and then understanding how to apply the indicators and kind of like smooth out the price action. But that's really all I wanted to show. If you have any further questions, like, let me know, like, real talk, like, Kush, like, show me what you got. Like, does this make sense? Like, is it anything like I can explain a little bit more clearly, or anything? Bless you, like anything that I can, because the thing is, I want you to be able to walk away with an understanding. Like, you're not going to be able to understand everything on the very first view, but I want you to be able to walk away and have a fundamental knowledge, if you will, base understanding on basically how price moves. Because that's literally what we're doing. We're just studying the movement of price. And this just happens to be Bitcoin that we're currently studying. But basically, this is how Bitcoin has been moving over the last, I don't know, let's say, if we're looking at it from here, right, from March 5th, right? It's basically been in this area of accumulation. And this area of accumulation, of consolidation, if you will, is basically a ranging area, a ranging zone, because it's basically playing in between this zone. And again, this is just a zone where it's accumulating money. It's not moved yet, right? It hasn't moved. What time frame would you like me to drop down to? Test my crew, cause you're gonna get sleuthed if dead, man, I'm certain. Okay. Well, again, as long as right. And that's what I was going to say. Excuse me. Right. And that's what I was going to say. Excuse me. So I'm choking. I was going to say, right. As long as you understand where you're going to put your stop loss and where you're going to put your take profit. Because you're right. There's many scalping opportunities here. But I wouldn't encourage someone who's beginning. I wouldn't encourage someone who's just starting. I wouldn't encourage you to just jump in and scalp in the market. Like, because really, I guess what I'm saying is, I know you would understand, but I would ask, how would you set your trade up? Because these are long. You don't want to test my crew because you're going to get sleuthed, dead man, I'm certain. 70,500, 537, 70,537. Okay, so it's somewhere down here. 17, hold on, 70,530. Okay, so you put your stop loss there. But what was your entry? 69.7. Okay, 69. You said 69 what? Let's see, somewhere in there we gotta stretch it. This thing is crazy, man. All right, we're gonna go with 69.35. All right, so you put your stop loss at what again? Because I had to move it. $75,000. 537. So somewhere in here. It's crazy because when we start getting closer, it just starts jumping numbers. All right, 15-minute. We're dropping down. Okay, and you said 537. I still can't. I think I could manually do it, but yeah. I just wanted to. Yeah, you get an idea. All right, so where'd you put your TP, your take profit? Well, yeah, you're in profit. You're in huge profit. Yeah, you're in. Okay. Where do you want me to drop down to? I can go to the 1 minute. I'm at the 1 minute. Thing is over here. I can't see my. Oh, really?
You might want to pull the take profit to the side.
All right, so bear with us. Right now, what we're doing is we're trying to gauge where this actual entry was occurred at, and what. Okay, so I see. I can't see the. That's what I was trying to do. I was trying to drag over the. Yeah. And then, huh? $69,732. All right. And that's your entry. Your stop loss was where? 75.37. All right, we're gonna roll it down. And then you don't have an idea where you want to take your profits at? All right, so as of right now, you are in profit. We're looking at this on the 5-minute time frame. And if we're looking on this in the 5-minute time frame, again, like I was saying, you see how we broke this moving average, right? Now, again, these moving averages are still measuring the average based off of whatever your period is, your input is. But again, once we broke inside of, okay, so once we broke this one 317 moving average, we broke the 200 moving average. We broke the 200 right here when we started to close right here. But I wouldn't have taken that by itself. Well, I was gonna say, how about I share? $21.50. I don't have. Oh, you're talking about the moving average. Let me see if I can add the 21. Was it a Zima or what is it? So, moving average simple. Which one would you say it is? I think it's the just moving. Yeah. Right. Well, you can go on your chart and just tell me which one it is. Yeah, I don't know. Yeah. 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 Well, that's what I'm saying. Honestly, well, that's why I was asking if you want me to use the Zima because that's what I have. That's all I have. You said 21 and 50. So now what we're doing is we just simply adding another indicator. We just added this indicator, and so it's the 21. And then what we want to do is now we want to also add the 50. So we're going to add the 50. So got the 50. And so yeah, that's kind of noisy to me though. I mean, but how did I'm about to turn these off and have you explain. And I was gonna say I want you to explain to me. Well, okay. And so that's what you. So you got in off that alone. Oh, okay. I got you. Oh, okay. Well, the thing is as long as you know where you set your take profit, your stop loss, and you understand where to enter at, hey man, that's all that matters. Like as long. Well, yeah, this is the 5 minute right now, but I can tell you we got this right here that just happened, and this right here is this is one of these liquidity pools, liquidity grabs. Okay, so this right here was a. No, I get it. Oh, okay. Well, what I'm saying is I can see why you're selling. I mean, we got all these red fair value gaps that are formed up here. And so what I'm just saying is when I see something like this right here is automatically like a break pad. Like this right here is telling me that price is beginning to get exhausted. Either one or two things is going to happen now. Either price is basically going to accumulate all this buying interest and come back down to this level, maybe a little lower than this level, right? But then it's going to basically accumulate all this buying interest and push back up. Or, right? Or what it could do is depending on, are we near a demand zone? Because you got to remember all this talk of where we are and where price is currently at. It's all based on what level are we in the market? Are we near it? And this is the reason why I use the day chart, because the day chart will literally show you where you are in relation to everything happening, right? So when I marked all this in red, I was showing you that all this area right here is accumulation. It's basically consolidation, low-key consolidation. And all that means is as long as you can see these happening and you can get in on the tops of these and you can get in on the bottoms and trade from the bottom to the top and trade from the top down to the bottom, you're fine. But the problem is when you're in this middle area, right? You have to operate with caution, because as long as you're in this middle area, I'm literally being honest, the market could it could do anything. And I think that's where you kind of lose the probability. Excuse me. That's where I feel like we kind of lose, or I lose the edge. I lose the edge when I'm playing between, when I'm in the zone sideways market. This is kind of the sideways market, because it's in here where it's doing this up and down, up and down, up and down, up and down. You see, it's in here where it's doing a lot of that. So unless you get at the very top of this position and you trade it downward, or unless you get down here at the bottom of this and you trade it up, I just try to stay away from being in the middle. I learned a long time ago, you want to play near the borders. You want to play near the boundaries. And the best way to do that is understanding where's your resistance. I mean, this is really simple stuff, but we're going to do it again. Where's your support and resistance? Basically your tops and bottoms, right? If you can understand, you can see, you can look and start to see these areas forming in the market. It's in these areas where you can really start to take advantage and, capitalize, right? Gain tremendous wealth from the market, take a tremendous amount of money from the market. And so if you can see this happening, you can see this forming, like when we take everything off, right? We're just looking at the market, very naked. All we're looking at now, these are Japanese candlesticks. I personally don't trade Japanese candlesticks. I like to trade the bars. But again, all you're simply looking at, all you're looking for is you're looking for price to reach an area of resistance and demonstrate if it's going to reject it. So up here is where I would take an interest in opening my trade. When price gets up here, I'm either looking for it to break this level, or I'm either looking for it to shake this level. By that, I simply mean fall down, right? But it's here where you have the greater edge, the greater probability in trying to earn money. I'm just sharing with you. And I'm not knocking my boy at all, my boy Kush. This is because he's been doing this for a while. I'm just saying, try to be very, very cautious. To anyone who's learning this for the very first time and attempting to do this, try to be very cautious not to be trading in the middle area. You want to stay out the middle, the zone areas, right? You want to be near the support looking to buy, and you want to be near a resistance zone looking to sell. Because what happens is when price comes back up here, or let's take this for instance, we're going to replay this. When price came down, what we're going to do is we're not going to get in right here, because what did I say? Price, you could get in and the market is going to go back up. Let's say you got in for a short. As soon as you entered the market, price starts to fall back down. You cover that loss. You cover that high, and then you take this down about 2 or 3, right? When you do that, you could get in not knowing which way the market is going to go. You could get in and price could literally go in the opposite direction, because the thing is this is where they're taking people's money, because this is the accumulation zone. This is the consolidation. This is where it's taking both buy and sell orders before it makes its next move. So what we would do is we would play this forward using 1 bar replay. So let's play it forward with the 1 bar replay and see which way does it go. All right, boom. Now that price has come down here, what you want to do, as soon as it enters into your support zone, and it gives us this price action play right here with this hammer, as soon as this happens, what you want to do is, right, this is a price action play for real. One of these, this is what I trade. This is the thing about trading. Trading has different techniques and different entries for different markets, right? This is just one of the entries styles or entry types that I use. So we're going to erase this, and I'm going to show you as soon as price came back down to this level, and this is just using price action, by the way. What I would do is drop down to a lower time frame, and down here in a lower time frame, you kind of see more clearly. You got an engulfing candle here, you got this bearish candle here, you got this upside down, this hammer here, you got a pin bar. So you got a lot of the big price action plays that we look for happening right in this area, right? So now what I would do is I would set it up for a long, and this is literally how I trade. This is how I would trade it, and you would bring this to cover down the most recent low. I look for the most recent low, so you got to scroll left, and it's going to be over here somewhere. So it's kind of right under here. And so what I would do is I cover my most recent low, right? Somewhere right about there. And then we would take our take profit. We would take it out 2. We would take it out 2 to 3. All right. And this is how you would measure what's called your risk to reward ratio. Now, I'm going to tell you right now, because I already saw this already in real time, but I'm going to tell you right now, that's going to turn out to be a beautiful run. All right. So what you would do, as soon as it drops down on the daily chart, it gives you that price action play right here, right? This hammer. You drop down to the lower time frame. So first, what I want to do is I want to drop down to the hour time frame and see what type of price action movement am I getting on the hour time frame. Then I'm going to drop down to the 15-minute time frame, looking for whatever price action. Then what I'll do is I'll throw my indicators on. Ooh, now that's beautiful. You get a play like this happening in your zone. That's beautiful. So what we just got here is we just got the 200 and the 50, or the 20 and the 50. Hold on, which one is this? This the 20? All right, so we got the 21 and the 50. They just crossed over. All right, and they just crossed over in a key area. Remember, it's not just the crossover we're looking for, y'all. We're looking for a crossover in a key major zone. We just got these bad boys crossing over in this major zone. We started printing green candles above it. We're going to set that play up to look just like this. We're going to take an entry on the very first candle that prints outside the zone, which is right here. And we're going to get in it for the long. And then what we're going to do is we're just going to simply play this forward using the 1-bar replay. And when we play it forward, you're going to see you're literally going to be in profit, if I'm not mistaken. That's how we play this out. We're going to play it forward. Now, we're still in the zone. We're still in the zone accumulating price action. And now we're going in profit. We're in profit, y'all. We're still in profit, and some beautiful profit. You know what? Let's do this for real. I need to stop this, because what I want to show you guys with with money applied. And what I mean is, all right, so now we got our price action play that just set up in our zone. And so now what we want to do is we want to add some leverage. We want to add a lot size. So this is BTC. I'm going to tell you right now, BTC, Bitcoin, the lot size you use on Bitcoin, you don't use, like you wouldn't use the same lot size on indices as you would Forex or stocks. All right. The lot size is simply the quantity. All right. Certain indices, certain stocks, certain assets move differently. So because this is Bitcoin, y'all, I'm going to show you a reasonable lot size. We're going to go 0.35. Okay, let's try to go 0.5. All right, 0.5 is a reasonable lot size. Now, if you don't know anything about lot size, you don't understand lot size, I got a book that explains all that. All right, if you don't, all you have to do is go to babypips.com, or you can go to my website, and I have a ton of resources related to day trading listed on my website and on my YouTube channel. But literally what you would do is when you go and put in the lot size, and this is something that you can do within TradingView. This is the reason why I like the back testing feature. As soon as you put the lot size in, you press it as if you're going to actually trade it. So in this instance, we're going to trade it. So right now we're going to press buy because we want to go long. And so what we did is we got in long down here. So I'm going to bring my, okay. So now we adjusted our risk to reward to go with our entry. We were in our zone. We saw our price action play out the way that we wanted to based on our daily time frame. Because remember, looking at the daily time frame, you're looking at this price action play that gave you right here with this hammer. All right, you can see we're already in profit, $1,700. And the reason why it's showing you that already, y'all, is because the daily candle is already foretelling what it would look like in 24 hours. But when you drop down in the bar replay, you got to remember the bar replay is looking at the 15-minute time frame, so it hasn't transpired yet. But what you would do is you would simply just play that and let it run to show you what you would have done and how you would have traded that. Now I messed up because I used a 1. I was supposed to use 0.35, but I'm going to go back and use the 0.35. But what you would do is you would take your take profit, set it up here. You would take your stop loss, put it right here, and you would see how you would have performed trading that. How would you have performed trading that under your condition or under your practice that you apply to the market? And so right now you can see we're still in profit right now, in about $1,800 in profit, $2,000 in profit. We're dropping. Now we just got, now see, that's another entry right there, y'all. That's another entry. That's for my more advanced traders. And what I mean is that's an opportunity to scale in the market. See how we got that big push and then we pushed up, right? Like this right here, y'all, I can't even, like, it's no cap, bruh. So we're simply waiting. It hasn't hit our take profit. This is where you have to be patient. All right, it hit our take profit. So using a 1 lot size, a standard lot size, I just need you to understand, using a standard lot size, you would have earned $6,000, $6,497 on Bitcoin. All right, that's just using a standard lot. All right, what I'm sharing with you is the power of day trading, not the money. Hopefully you understand the skill. The skill is what I want you to really, really take from all of this, right? The skill is what I want to leave behind, right? The skill is what I want to be. I really feel like that's going to be my contribution to humanity, right? I want to offer you the opportunity to learn the skill so that you can do this at your own leisure. So you can literally just come and read the market, see the market, find opportunities, look for opportunities, setups, and then just use your stop loss, your take profit accordingly. So we're going to use a 0.35 again because it came out with the 1. I didn't mean to do that. So you can kind of see with the money. Oh, it won't let me do the 0.35. Maybe it won't let me do the 0.5 either. Yeah, it won't let me do an increment lower than 1, y'all. Sorry about that. So that's how it is sometimes on certain assets. Certain assets won't allow you to trade unless you trade micro sizes. Certain assets won't allow you to trade lot sizes outside of the standard lot size. So you have to understand that. Again, that's the reason why I encourage you, if you really, really are interested in taking this thing serious. If you're really, really interested in taking this thing serious, you get my book, right? Or you can go online. There's a lot of free content online. There's lot size calculators. There's other information and content online that better explains it and breaks it down. But simply what the lot size is your quantity. It's your size of your position in the market. So based on your size and position of the market, with some leverage times leverage, it will multiply your position, allowing you an opportunity to earn greater profit and allowing you to also put yourself at greater risk. So if we look at this, we would have put our stop loss down here. We would have lost based off this trade setup, based off the way we got this set up. Currently, we would stand to lose $2,026.86, but we would stand to earn $6,337.11. All right, so the way that would have played out, we just saw that it would have played out perfectly fine. I don't necessarily need to do this again, but I want to do one more, and then if you got any questions, feel free to ask me. But that's how we would have set it up: our take profit, our entry, and our stop loss. And then you just, like I said, you can back test this 1,000 times. All right, but I want to show you what happened here, though. Let's go back here real quick. Let's go back right here. What happened here was an opportunity where you could have scaled in the market. And what I mean by scaled in the market is, remember, we start to trade what we look for are breakouts. So right here, this would have been an area in the market, right? All this in here is called internal structure. All this is basically internal price action. When we start to break above here, now we're breaking major structure. And that's what happened with that big bullish push up. When we saw that, that's another buying opportunity to get in an opportunity and scale back in the market. Boom. When this happens, right, you wait for price to actually close above this price level because it has to break this structure first. Once it breaks this structure, there's another opportunity where you can get in on some price action play. You can cover this loss right here, just right about here, and then you can take this up another 2 and 3, and you can literally just sandbag it, and you can scale in trying to get more profit, right? That's literally how you would set that up. Let's go ahead and play that forward. right? Let's go ahead and enter the market first. We're bring our stop loss down here. So you would stand to lose using one standard lot. You would stand to lose about $2,895.95, but you would stand to earn if you do it off the ratio, risk to reward ratio that I have here, which is 2.03. You would stand to earn $4,369. All right, so that's basically a 2-to-1 ratio. As you can see, basically it's two times the amount of your loss, and you would just play that forward, looking to see how it plays out. Now we're in profit, y'all. We're in profit like $2,000. Now price likes to play around. It likes to dance around. You got to remember, it doesn't go in a straight line. It likes to go up and down, right? And with Bitcoin, it goes up and down really, really hard, really, really fast. That's why people are really, really attracted to Bitcoin, because if you can learn to trade Bitcoin, you can make money so quickly. So right now we're still in profit. You see, this is our profit, and it appears that we're going to start coming down in drawdown. All right, now we're in drawdown. Now this is the part where you really have to test your faith because a lot of people can't stomach this, right? They're going in negative and being in positive one day, right? Because it doesn't just go straight up. It doesn't go straight down. You get what I'm saying? You have to understand that your strategy is what it is. You have to back test your strategy so you can be confident in these times when it's reading in red. Because right now I can tell you this is a very uncomfortable feeling to some people, especially when you're only working with $1,000 account, when you're only working with a $5,000 account. You're looking at this already and you're thinking like it's never going to move back in your direction. It's never going to move back in profit. But I can't tell you that's the furthest from the truth, right? So you just got to be able to have thick skin and be able to withstand the market movement, because the market will go up and it will go down in a heartbeat. As you can see, I'm playing it right now at 10x speed. This is actually a lot faster than it would move live, but it feels like it's moving this fast when it's in the live market. All right, boom, it hit our take profit. We earned $4,474.15 right off that one trade. And that's it, man. That's literally how we do it. I didn't even need the indicators. Yeah. What's up, man? You got anything else for me, man? I feel like we've been at it for currently it says we've been at it for 1 hour and 17 minutes and 43 seconds. I hope I was able to deliver some value to you. And I hope it makes sense, bro. So now that we've gotten at a place in the market where it's basically hit our take profit twice, I would look to either re-enter the market on an opportunity where either we're looking for price to break, another breakout. So if we get another breakout, say right here, right? If price breaks above here, that stands an opportunity for us to get another entry in the market. But that's really all there is to kind of like setting it up. Again, using the indicators, using the tools, I can teach anyone how to do that. If anyone is interested, anyone is really truly aspiring to learn how to do this, again, you can hit me up on Instagram. You can hit me up on YouTube. You can message me on WhatsApp. I don't mind. As long as you're not wasting my time and you're really sincerely interested in learning, I'm really sincere and interested in showing you and teaching. All right. I love it. I actually get fulfillment out of teaching people. I get excited out of kind of just, I guess kind of being challenged by the market and just trying to basically learn each day. I think that's the thing that I'm more excited about as I continue to trade. I get excitement, I get fulfillment in understanding that never no 2 days are the same. No 2 days are the same. No 2 trading days are the same. Although you may see similarities in different price action patterns and price action plays, which is also great because they offer like clues to what price may potentially do next. they're never two identical plays. They're never two identical days or two identical setups, right? It really truly is just understanding price action, understanding understanding the tools that you're using, you're applying to the market, and then just managing your risk, man. I don't really think that day trading is that complicated. I think we make it complicated because we feel like when we have money at stake, we have to know so much. We want to know so much because we don't want to lose our hard-earned capital. And that's why I encourage anybody who's sincerely interested in taking this thing serious, I encourage you to always paper trade first. Like if you've been following my channel, you've been following me, you understand the one thing that I've been an advocate for since day one is never use your live capital when learning how to trade, because it just does not work. You're literally you're taking away from your ability, in my opinion. You're taking away from your ability to truly just learn, because you're putting all that stress, you're putting all that pressure on yourself. Now, if you have the capital to invest and you have the capital to spend, then I say go at it, have at it. But anytime you're using your own capital and you're trying to learn, I'm just going to tell you right now, it's not the easiest thing to learn. All right, so right now, oh, there you go. So right now, this is how I'm currently looking at Bitcoin. So I just I smashed Bitcoin earlier. But what I'm looking for is Bitcoin to give me another opportunity to get in. And I can't get in right now because it's trading between these two areas. And I needed to either one show me it wants to go long, because what I'm saying is right now, I don't know what the market wants to do. Now, I want it to go long. Now, remember, we want the high probability trade to be long. And the reason why we want the high probability trade to be long is because we are in what's called an uptrend. If you look, we are in a solid, bona fide uptrend. This is what this is. All right, we are in a uptrend, and we would like to see price basically go long, go up more. And the reason why I say that is because then we're moving with momentum. We're moving with the momentum of the market. Right now, the market is long. You should not be looking to sell the market. Now, if you're selling the market, you should only be doing so as a scalper, because if you're selling it in here, you're basically counter trend trading it, which is very, very well within your right, but you're counter trend trading it, and you're going against the actual market sentiment. You're going against the actual market momentum. All right, so that's Bitcoin. Let's take a look at U.S. oil. Like U.S. oil right now is doing somewhat the same. Now, this is an example of a bearish market. And this is U.S. oil right now. Looking at it, if we're looking at it on a daily time frame, you can see it was long and then it switched bearish. You see that? It was long and then it switched bearish. And it switched bearish starting here. So now the market has switched bearish. We should be looking for opportunities to short. So now that the market has switched bearish, so we're going to go ahead and take these off. Let's close these or blind these, if you will. Now that the market has switched bearish, you should be looking for one of two things. I'm going to keep it really, really simple. As I said earlier, you're looking for price to close below here, or you're looking for price to close and break above here. Right? If price breaks and closes above here, we're going to be looking for long opportunities. Long is up here. This is where you look to buy. You're looking to buy up in here. If price starts trading above this line here, but right now, because the market has switched bearish and we're now in a downtrend, you need to look for confirmation before you jump off the porch. You need confirmation that price wants to go short. And the only way you're going to get confirmation that price wants to go short, right? Because right now we're doing a lot of that sideways motion right here. This is that consolidation that I was talking about earlier that was happening on Bitcoin. You got to be able to recognize these phases too in the market. This right here is that accumulation phase or that consolidation that I was talking about earlier, right? Once you want to kind of stay away from these type of things, right? You see this happening, you know it's waiting to break out. So now we've accumulated all this price action right here. It's like a rubber band or it's like a accordion, right? Right now we've taken in all this air. So now we're going to blow it out and we're going to create the sound. All right, we're going to create the move with the move out, the blowout. Right now, we're waiting for price to either show us if it wants to go bullish by basically pushing about this zone and going up, or we're waiting for price to show us that it wants to go bearish by either going back down past here, closing beyond that that line right here, this white line. And that's kind of how you want to look at it. Right? So I wouldn't personally, just based off price action alone, I wouldn't even take an interest in shorting this yet until I got confirmation. So when we throw our moving averages on, we can see what those look like. So one confirmation is we're below the moving average. That's a good sign, right? We're below the 317 moving average. Then we throw the 200 on. We're below the 200 moving average as well. Remember, the 200 is the white, the 317 is the blue. So right now, price is trading below that. So that means we are definitely confirmed in a downtrend. And so I'm just simply waiting for price to break and start closing below this price action right here, 76.18. And then I would just simply set it up like this. We would set it up for a short. And I would cover this high right here. And then we would cover all the way down here to this low. And we would just let that play. And that's how I would look to short US oil. But listen, this thing, it is complicated, but it can be easy. And it can be easy with the proper mentorship, guidance, and coach, or anybody who understands it. I'm not saying I'm the best. I'm just saying I put in the time. I put in the time to understand how to articulate it and how to explain it to other people. Hopefully in a manner where it's understandable, it's easy to digest. But I'm saying I may not be the only person if you're interested in trying to take this on board and truly learn, I may not be the only person you want to follow. There's a lot of Forex traders. There's a lot of YouTube Forex traders out there that I follow. But all I'm saying is get a real understanding of price action. Get a real understanding of leverage, lot sizes, and spreads. Once you learn how to understand and navigate that, then entering and exiting the market is easy. Because once you learn how to measure your lot size and measure your stop loss and measure your take profit, now you're simply just allowing price to move within your trade setup. All right. And that's what we want to do. We want to allow the price. We want to come to the market with a structured take profit. We want to come to the market with a structured stop loss. And we want price to move within the structure of our trade, within the structure of our setup. And that's it. If it hits our stop loss, we lost. If it hits our take profit, we gain tremendous. All right. And that's pretty much all I got. Again, it feels great to be back. I really hope I get more views on my lives, man. But unless my boy Kush, you got anything else? Anything you like to add? Anything you like to share? Yeah, but what I'm saying is there anything that you're unsure about? Anything that I can explain further? I mean, other than that, I don't want to basically. Yeah, I'm just saying I don't want to just keep beating a dead horse. Unless someone proposes like new questions or new material, like I'll go over the same thing 100 times, and I don't want to do that. Like I want to basically speak on topics of things that people are, really truly interested in. But hopefully this offers clarification on how I trade, how I look at the market. Again, Peni2Dollarzfx. Y'all have a great one.